as you know, on this program, I've indicated that I thought there would be a slowdown that would be in the economy by now. And the reason for that is the same rationale that Siegel uses, and that is Siegel and I watch the money supply. We're monetarists, and we know that since July of 2022, the stock of money in the United States has actually been reduced and contracted, and that's only happened 4 times since the Fed was established in 2013, and there have always been slowdowns, if not the Great Depression in 1929, 1933, that resulted from those slowdowns in the money supply. So it will slow down, but it hasn't happened as rapidly as we, the monetarists, have indicated that it would. So that part is a little bit tricky. The thing that isn't tricky is inflation. And John Greenwood and I, using the quantity theory of money, predicted that the inflation would peak out at 9% per year. Well, it peaked out at 9.1%. This year, we have indicated long ago, using the quantity theory, that inflation would go down to between 2.5 and 3% per year. It's currently at 2.7 per year. We will hit the bullseye again. And next year, we anticipate that the inflation rate, headline CPI, will drop down below the Fed's target of 2%. So I think the Fed is just off base on this because they're data dependent. They have no theory of anything. They basically don't know what they're doing. They're watching the data every day. And the data today tells them that instead of 4 declines or reductions in the Fed funds rate next year, there'll only be 2.
Now, Professor, I just want to get your thoughts. Do you have any on the BOJ? I mean, given that some in the market argue that the economy is strong enough to warrant a hike, and perhaps it's a bit of a scenario of confidence versus caution now, communication as well, and maybe a few political considerations down the road too.
Well, now that's a very interesting point. The BOJ basically doesn't know what it's doing. And the money supply for now, since 1990, has been growing way below any kind of golden growth rate that would be consistent with hitting their inflation target. And they basically don't know what they're doing. So that's the end of that story. They have experienced, instead of most journalists say and analysts say, they've been experiencing very loose monetary policy with low interest rates. No, they have very tight monetary policy for decades. The money supply has been growing at a very slow rate, and that's why you've had for decades no growth and very low inflation rates in Japan.